Welcome to Invest. We'll talk about investing, finance, or professional development. So current time of 10:23 a.m. on Eastern Time, Ethereum could trade $2,847, up about 1.35% so far. Respect over crypto market and the equity market, we are attempting to rebound from the consecutive days of sell-off that we've been experiencing so far. Obviously, with respect to yesterday, was one of the worst days if you are an equity investors, also with respect to being a crypto investors as well. A huge sell-off across the board because inflationary pressure, corporate earnings being missed, Wall Street guidance being shaven as well, and also anticipating the upcoming events, which, we still have a couple weeks away, but knowing the fact that this is the last week of April, is approaching, closely. We are basically, 3.5-4 days away from May coming in, and then we're going to be, anticipating the FOMC meeting, which, based on Jerome Powell verbiage recently, we will be doubling our interest hikes from 25 basis point to 50 basis point. So with that being said, obviously, the market is wild west, right? But knowing the fact that collectively everybody understand that everybody is red at the moment. Everybody's portfolio is red, including some of the hedge funds of in the world, right? I would say most of the hedge funds of the world are down at the moment. Some of them might even have to liquidate because of their margin calls, because of their call or put options that they have to liquidate at the same time. So it's just been a mixed bag in terms of the overall market dynamics. But the ultimate big question mark is that we are trying to attempt, or we've been trying to price in the rate adjustment that we'll be expecting going forward, right? So where we gliding naturally for Ethereum, right? We are at the exact level that I identified, right? The 2850. You could see that clearly we've broke through below this level for several times, right? 1, 2, 3 times in the last 24, 48 hours so far. But you can tell that, as we got below to a more of a submerged level, we were extremely oversold, right? The 36 out of 70. So do we see coming down all the way to maybe 20-ish out of 70 on an RSI scale? That's questionable, right? Because the next logical level that we'll go down to will be somewhere around 2621, which is a substantive level. A non-substantive level will be somewhere like 2725, right? You can see that clearly we tried to get there yesterday, but immediately got bought up because of the submerged level. As you get lower into the submerged level, the water pressure increases and subsequently allow you to rebound. And also because people buyers are stepping up as well, which subsequently translates into a V shape on the RSI, which that's a good thing because every single time we get around the 35 out of 70, we bounce. So that was the logical thing to expect. So right now we're just naturally being stick to the magnets of 2850, try to recuperate back up. But in terms of is it a good time to buy now, I think long term these are no-brainer levels. And if you follow my Patreon, the exact move that we need to be following going forward, right? For Ethereum, these are relatively attractive level and steel levels, if you may. Respect to Bitcoin, about 1.5%. We are, again, back to the magnets level, right? The 38500. And if we crack below, heading down to 34,500 will be logical. But you can see that clearly we got reversed up because of the resistance. So you can see that clearly every time you kind of go submerged below the level that we at right now, just slightly, you kind of get bought up because investors step in, and knowing the fact that with respect to the magnets of 38,500 is relatively strong magnet, right? Based on the level of appetites that people have had before. So, buying at this level is actually not terrible, right? Ethereum Classic, with respect to being down about 0.5% so far, it's still sliding off, right? And this is natural because of the level in between. Right now, we're being consolidated around 30 because that's a prior platform. But a more substantive one will be coming down all the way to, with respect to being 25, 36. So right now, it's actually not terrible in terms of incurring risk, knowing the fact that we're 32 out of 70 right now. And also at the same time, the MACD line is below the signal line. Respect to Dogecoin, flat as well. We gave up everything that we gained yesterday or lost, from days before. Very funky. You could see that these are very abnormal charts that we're forming. So I personally would not really touch this. I would be extra cautious with this one, especially because of, you know, these two peaks here. So anywhere from basically, for me, right, 12 cents to below would be where I'll be ideally DCAing at, right? Cardano about 1.2%, anywhere from basically current level all the way to 75 cents is logical DCA. Solana, anywhere from 85 to 75 from here, right, would be where I would DCA at. At the moment right now, the 41 of 70. So yeah, ideally coming down to a bare minimum at 90 would be very logical to like maybe incrementally dollar cost average from there. XRP down about 1.75%. We're heading down to a more of an attractive level, 62 to 57, right? Again, anywhere around the current level right now is already like relatively attractive, with the 27 out of 70 is extremely oversold. Polkadot down about 2.3%, anywhere from basically, I would say current level all the way to 1406 from here. This is logical to DCA. Algorand down about 2.16%. We are basically near rock bottom already. You can see that clearly we reversed back up when we hit 33 out of 70. So it's not terrible to incur risk. We're basically 3 cents away. So you know, in terms of like collectively what historical time frame to be buying, I think now is already presenting itself. Shiba Inu 2100, 1400, 900. I think right now is the 23 right now, right? So coming down to is ideally where we had that bounce before, 2100. If we break 2100, coming down all the way to 1400 to 900 will be possible, knowing the fact that it will be kind of like a falling knife, right? So definitely feel sorry for those that bought in at the 9,000 from days before, months before. MATIC above 0.5%. We are currently in a buy area right now, 142 to 120. So right now it's a screaming buy for Polygon. Avalanche or AVAX up about 2.5%, 59 to 50. And then Luna, you can see that we have a head and shoulder patterns forming with the 47 out of 70. So coming down all the way from the current level to 75 will be a first level that will have a pit stop. But if we break 75, heading down to 62, 52 to 45 would be those respective levels of DCA at. So it seems like the market is relatively weak. We're still kind of being magnetized by the approximate level that I've identified. But obviously, the market is no longer trading on fundamental. It's basically trading based on emotional roller coaster. And also the whales, I would say, are acting in a similar fashion as well. So that's, you know, doesn't convey a lot of confidence, combined with the negative corporate earnings outlook and, you know, the anticipated pressure until we get to the FOMC meeting in May. So as we know from the market cycle analysis that we did yesterday, feel free to check it out again. I think we are still in the depression mode, which is logical, right? So we're going to have more elongated stretch out of negativity until we hit to that rock bottom. Then we kind of reverse up back to more of a normalized cadence, recover a little bit, and then you're going to have that fake out, right? That we talked about, the disbelief. And after we get to the disbelief, you have a slight sell-off again, and then you're going to go back into, you know, hopeism, optimism, subsequently to euphoria. You know, that's where the bull market will continue from there. So hopefully this is helpful. Appreciate you for joining me on this Wednesday again. And check out for the next one. Take care.